Alrighty, folks. Hopefully, you've seen video number with Dan Bird, where we talk about the market being set up to be messy, aka squishy, was the technical term I came up with. What we're going to do now is we're going to talk about the only text conversation Dan and I had while he was on his cruise, and that was about the amazing calls that Harry Dent made. He's made some calls about the market that we just have to talk about. 92% down for the Nasdaq, 87% for the S&P, whatever it is. And Dad said, "You know what? We got to talk about it. I want to look at the data. I want to see what the heck Harry is talking about." So Dan, it caught your attention. So I think he did what he wanted to do.
Yeah, interestingly, before you sent me that text, there was an email that came out from Turner. Remember Turner Capital?
I do, yeah.
And apparently a lot of his customers sent him that article as well. So he made some comments about it, which I'll echo some of those comments today as well. But I mean, this is a clock, a broken clock will be right eventually, right? And Harry Dent will be right eventually.
Well, you know what? Let's talk about that a little bit, because I have been watching Harry Dent for a long time. And these are my words, not yours, so feel free to disagree. It feels like to me he's even gotten more and more negative, right? He used to be the guy that called the 30% crash. Then he's the guy that called the 40% crash. Now he's the guy calling for a 92% crash. So I ask you, let's say 2024 is a bad year and the NASDAQ goes down 25%. I got to tell you, I still don't think Harry's right. He's calling 92%. That's almost unimaginable.
Right. Well, I mean, it went down 38% in 2022.
Yeah. Right. So is Harry Dent right if it goes down 38% when he called 92? I say no, but I don't know. Maybe I'm wrong.
Well, I mean, if it goes down 25%, he's going to say he's right.
Well, come on. That's not 92%.
But it's not 92. No.
Not even close.
In fact, let me share my screen. And I took out a few select quotes.
Let me ask you this. I don't know if you looked it up. Have we ever had a year where the stock market was down, even in the Great Depression? Was it ever down 92% a year?
The Great Depression, not in a year, no.
No, that's
not in a year. No. The Great Depression did go down 85%, but it took.
But that was over years.
It took till 32, so 3 years. Took 3 years for that to happen.
Yeah, that's one of the things that I have a problem with the housing crash, folks. Is they're talking about something that's never happened before by an order of magnitude.
Right. Exactly. Here we go. These are some select quotes out of the article. Economist predicts 2024 will bring biggest crash of our lifetime.
Yeah.
How does he know how old we are?
Yeah.
Biggest crash of our lifetime. Everything bubble will burst. Okay, so let's talk about a few of these. Economists noted that this bubble actually started in late 21, after the height of the COVID pandemic, with first signs showing in 22 when NASDAQ was down 38%. So that's the first signs that we're showing. Now, in late 21, by the way, not only Happy New Year, but happy anniversary, because this is the 2-year anniversary of when you and I first started doing this.
Oh, happy anniversary. That's right. 2 years go by fast.
It was December 30th, 2021. So in 2021, I showed some of the same things that I showed in the previous video about why I was concerned with the market hitting all-time highs, even as Wall Street was rotating out of growth and into value. And I said at that time that we had to be careful about 2022, especially with the Fed getting ready to start hiking. 2022 might not be a good year. All right. So this whole thing actually started in late 2021 is not a big surprise. This is not some kind of insightful thing that he's saying here. First sign showing in 2022 when the NASDAQ was down 38%. Well, let's talk about that. Down 38%. So this is my trusty secular bull and bear market chart. Anyone that's been following this long enough knows my my ideas about the secular bulls, right? Secular bears, and this goes all the way back to the 1929 crash. Secular bulls usually last 18 to 20 years. Secular bears usually last about 12. We came out of a secular bear. You can either measure it from the low in 2009 or from the breakout in 2013. But either way, the secular bull, it will not end until at least 2029, which coincidentally is 100 years from 1929.
Yeah. I really hope it's not that. Oh, that's weird.
That's symmetrical.
Yeah, that's symmetrical. That'd be wild.
I think it might actually could be.
Okay.
But so this is the 2022 period that he was talking about when the NASDAQ went down 38%.
Right.
But if you look at my secular bull chart, and I put this on the very first page of my website, it's free for anybody to look at anytime they want. It updates daily. Until one of these three turns red, we will continue to be in a secular bull market.
Right.
And not only have these not turned red yet, these are starting to move back up, move higher. So this is the period that he was talking about in 2022, right here. This was the bear market that was pretty clear at the end of 21 was coming, especially with the Fed raising rates. And then we hit this 200-week moving average line, so like we have many times in the past. And we bounced off of it and went back up. And it's exactly the way secular bull markets work. And this one will be no different. We will not only break out of this high, we will exceed this high. And this will continue until roughly the 2029 to 2031 timeframe. I don't know exactly when that's going to end. I don't know.
Sure.
But
okay,
most likely somewhere in that range. Now, all the things that he talked about, things like the surplus. All right, here's the deficit right here, going back to 1930. He says the deficit is so bad that, and it's artificial. All the money that's been pumped into the economy is all artificial, 100% artificial, he said. 100% artificial. All right, but if you go back here and look at this historically, yeah, we do have a pretty steep deficit right now, and we should have had based on the pandemic, right? And that typically happens in, bad times like that, but we're coming out of it now. The other one is, this is the public debt as a percent of GDP. Again, yeah, it hit a pretty high level. It's starting to come down right now. And then the interesting one for me is the CPI. If we look at this, and this goes back to our conversation we had before I left. This is CPI and PCE. So CPI is the blue one, PCE is the red one. And they kind of like parallel each other.
Yeah, clearly
So
rolling over.
I don't know if I can turn off one of these. The green one, by the way, is rental owner occupied housing.
Yeah, the owner's equivalent rent.
That stayed up there until the 2008 market. But, CPI is coming down, PCE is coming down. You have said that we may be headed for deflation, which we did have deflation. We had deflation right here after 2008. I think we could get to deflation again as well, but I don't think it's going to destroy the economy. I think it will actually be a good thing if it's temporary enough.
Correct.
So these are all the statistics that he's quoting in his article that, if you put it in perspective, it just doesn't make any sense. So then he says, we're still up there, we're still near the highs, and that shouldn't have happened. Well, yes, it should have happened.
Yeah.
It's exactly what should have happened.
Right.
So you've gotten a gift. You've gotten this rebound where you get a second chance to get out near where you could have before. Well, there is nothing in the market right now that says you should get out. Nothing. And I did a session here with you talking about the last big run-ups, big bubbles in the market. The 2001 2008, COVID, and how the technical charts showed us when to get out to prevent us from getting killed by those crashes. And that will happen again. We will see that the same indications in the markets. Now, I talked about some of those on the last session. Doesn't mean we're going to have a crash, but we will get warning signs. Now, does that mean you might have to give up 5 or 10% from the high? Yeah, maybe, but you're not going to lose 92%.
92%.
You're not going to lose 92%. And then this last one, when this asset bubble bursts, the price of everything, especially housing, comes back down to reality. Not only can you buy the house you want at half off, you can buy twice as nice a house for the same mortgage you were getting before. How's that for a Christmas present? What he neglects to say in this, if what he says is true, you won't have a job.
Yeah. Yeah.
No one will have a job if what he says is true. I just don't see it. Now, if he said, especially not in 24. Now, we will have a choppy 24. I don't think we're going to have, the kind of market that we had in 23.
Right.
But I think 24 will be choppy. I think we'll end higher. But it's not going to be a straight line. It's going to be up and down throughout the year.
Yeah.
So, but I don't think we're going to crash. Now, as we get closer and closer to the end of that secular bull market, as we get closer to 29 and 30 or in that range, that area,
right,
then the risk of a crash goes up dramatically. Okay. And there are a lot of things that could happen that could cause that. There are a lot of things that could happen at the same time that could cause that. It could be something with the election cycle. It could be something with the candidates that are running. It could be something with states trying to keep a candidate off the ballot, which is not only unconstitutional, is downright un-American. That something like that could cause civil war in this country. And I'm serious about that. That's just not the way we typically work.
Right.
And a lot of other things can happen too. I mean, Russia could, resort to nuclear weapons. I mean,
they could invade a different country.
All the countries could invade Israel, and we could end up in a world war. Any of those things could happen. But any of those things could always happen.
Right.
So you can't make your decisions. You can't say, I'm getting out right now because we're at the top. And all of these other things could happen. Well, there's no indication yet.
They could always happen. Yeah.
They could always happen. All of those things could happen. So if you're worried about all of those things, then don't even get in.
Right.
But there will be warning signs. And I pointed out some of them in the last session. I don't think those are critical warning signs yet, but they're just things to watch. Yeah. But there will be signs. And when those signs start to occur, and I promised my subscribers that I will do this. So I'm tracking, the charts here, right here. This is a market timing strategy that I've talked about before. This is the short term, midterm, and long term. When one of these turns bearish on the short term, then I will send an alert out to all subscribers and let them know that that has just changed. If I look at VectorVest, which I'm going to their conference next weekend, so it'll be interesting to what I hear. So this down here is called the MTI, the market timing indicator, and whenever this gets above 1.6, then what they say is the market's looking for a top. So you can see here's where it hit 1.6. That was a top there. There was a top there. There was a top there. There's a top there. We're up there right now again. We could stay there for a while, but because we're at this level, it is overextended. And it is very likely that the market will need to come back down.
Right.
So these are the kind of warning signs that will be there. And when VectorVest gives a change in their signal. Right now they have a confirmed up signal. If they change that to confirm down, then I'll send a note out to everybody. So there will be lots of advanced warnings of what's going on before the market actually starts to crash. And the market's not going to crash. It's going to give us warnings ahead of time. Like I for those that watched the one that I did for 2001, 2008 and COVID, I showed where those warnings were.
Mm-hmm.
And yeah, you didn't get out of the top. No. And you shouldn't get out of the top. You should wait for confirmation that the market is starting to roll over and then get out. But in all of those cases, the warning signs were there well in advance, within 2 months of the market rolling over, in front of, in the case of 2008, in front of an 18-month market crash.
Right.
Right.
Mm-hmm.
And the signs will be there. The warning signs will be there. And I'll let everyone know.
And we will keep coming back at a minimum once a week. So yeah.
Yeah. And I'll continue to show, like I did in the last session, I'll continue to show, the warnings that I'm seeing. And if those resolve, if they go away,
yeah,
then I'll say that too. We're going higher. But there's nothing that I see that says the market is going to crash like 1929 next year.
No. Yeah. I think it's just somebody who wants to make headlines. He wants to sell his newsletter. He wants to sell gold. I mean,
right.
What I really get now with all these doomers is they have to go more doom to get headlines. He would not get a headline at 40% off. He's got to go 92%. So some, article
that's
jockey.
Unfortunately, that's sad, but that's true. More people will tune in if you have negative headlines than if you have positive headlines. Yeah. If he said, I think the market is going to go up 5% this year, nobody wants to hear that.
Sure. Shoot. Even if he says the market's going to go sideways, nobody wants to hear that.
Right. Exactly. Yeah, exactly. Yeah. So, I mean, what I do is I just do the research. I look at the internals, what's going on underneath the covers that most people don't see.
Right.
And that's what I report on. And if it means we're going down, I'll say we're going down. If we're going up, we're going up. So
folks, you have 2 years. You can watch 2-year playlist of Mr. Dan Bird. Go back and see what he said back in late 22 or 21, how he was calling this year. And obviously go get his newsletter, get his free weekly update. I get it. You should get it. Any closing thoughts on all this?
By the way, it doesn't matter to me whether the market goes up or down.
Correct.
If the market does start to crash and we get those advanced warnings, we can make money.
Yeah.
We can go to the bearish, 2X ETF and buy that just like a stock and make money as the market's going down.
Yep. Very cool. Well, Dan, I appreciate you, man. You've made me a better trader. I appreciate you coming back each week. I know the audience loves your midweek updates when you have time for them. I just want to thank you for 2 years, and let's do another 2 years. It should be fun.
Sounds great to me, and see you in Vegas.
Yeah, I can't wait for that. You're going to come out.
It's only, 6 weeks away?
Yeah, it's like 56 days away or something. Yeah, it's pretty crazy.
You're counting the days.
I am. I get a little alert on my phone. Yeah.
Okay.
All right, bud. Take care. Thanks.
All right. See ya.